Hey everyone, welcome back to Jesse's Lane. First video of 2023. I'm excited to come at you guys and get started this year. Um, so I want to talk about the market first, and we got a lot to talk about. CPI numbers just got released for December, so let's go over those and kind of see what's going on with CPI at the moment. All right, so let's go through here. Let's talk about what happened in November. Is we got a 7.1%. Now on this chart, I wasn't able to get the December numbers, but those are 6.5%. And um, your annual month-to-month bump was actually down 0.1%, which is really really good news. Which means we had some deflation, which is probably welcoming right now for the Federal Reserve, as they're really trying to get into restrictive territory and bring down inflation as quick as they possibly can. So that's some good news that we are seeing. But I do want to go ahead and I want to talk about this chart as well, as we're going to kind of have some, probably the next 3 to 4 months, some pretty good CPI data. So this is of last year, 2022 CPI inflation calendar, kind of what happened last year. Let's kind of just go over this as we see January, kind of see where we're at. Yearly inflation rate was 7.5, roughly 8% in February, and then we did jump above 8% and even 9% into June. So I do believe that we are on a good track right now to have a rally potentially in the market even more, especially in the NASDAQ sector, which has just got hammered with all this rate increases that have been going on with the Federal Reserve. So I think that's some positive news that we are going to see in the next 3 to 4 months. But I do see some potential risk that could bring a lot of this stuff come crashing down, especially in the Nasdaq sector. With I believe that CPI is going to be pretty sticky here for around the May to June, July, maybe even um, months to come. I believe that we could see potentially a good rally, like I said, for the NASDAQ for the next 3 months. So those would be things like Meta or Facebook, for those of you who didn't know that changed their name. Apple would be another one that's probably going to rally for the next 3 to 4 months. Um, so anything in the NASDAQ, as we just as that whole sector really has gotten punished. Amazon would be another one that would be in that sector that would continue to do good. Things like Tesla, just because we're going to start seeing the Federal Reserve probably ease up on these rate hikes. According to the Wall Street Journal, actually, we are probably going to be seeing quarter point rate hikes from here on out. Now, how many more we're going to get is probably going to depend on this data that we're going to see here in the next 2 months. And I expect those to be pretty good, especially this March. So once we get to April, I should have pulled up whenever the Federal Reserve was going to meet, but I do know for a fact they meet February 1st. So here in about 2 weeks, roughly, they're going to be meeting and they're going to be discussing it. I expect a quarter point rate hike, and then I know it's mid-March that they meet again. And I expect another one of those. Then things could start and get interesting as um, we see these numbers continue to go up. Now, obviously, here is not a big jump, but I do believe we're going to be more and more in restrictive territory as we see those rate hikes. Um, especially like the 3/4 point rate hikes, they just take a while for things to ripple across the economy. Now, obviously, some things are already quick, like we're seeing in real estate. Real estate's been, I mean, they haven't been hit super hard, but they have definitely slowed prices, and in some areas even started to go down a little bit, which is kind of well needed because I believe we had a 20 to 30% uh, rise in real estate in the last year and a half, 2 years. So that's probably a welcoming number to see from the Federal Reserve, and also people who are just wanting to buy homes here in the near short term. Um, as we start seeing price slow or maybe even cool off and decrease. So obviously for home buyers, that's not a good sign, but for buyers, that's a really good news. But like I said, I do believe once we kind of get into this May, June area, I do believe we're going to start seeing um, some pretty sticky numbers. I believe that we're going to have a hard time getting inflation below that 4%. honestly through the rest of the year. I mean, you're starting to see, prices cool off here in July, August, September, October, and then obviously November and December as well, as we just saw. So those are going to be pretty tough numbers to bring down once you get closer to 4%. I do believe that we're going to be probably in the high threes by the end of the year, which is good news. I'm sure that's going to be welcoming news for the Federal Reserve, but that's going to mean that they're going to have to keep rates higher for longer. Now, one thing that could easily turn everything inside out and nobody can really predict, but we could easily see a recession, fairly deep recession, if pandemic savings starts to go out the window. So if jobs are cut pretty quickly, and people are forced to use their pandemic savings, that could actually potentially be some worse news for us in the longer term. So, and then we could have all this do again where we get a Federal Reserve U-turn and literally start cutting rates all the way back down to probably somewhere, really, really low. If we start seeing a pretty deep recession, um, we could potentially see them go back down to nearly zero again, like we saw in 2020, and maybe even more money printing to come as well, which is just insane. But also, we were printing money March of just 2022. So, I mean, if you want to talk about crazy, that's crazy as well. But so, some more good news. I want to talk about the bond market. This is kind of a prediction of what we're going to see um, here in the short term to longer term. So, the bond market right now is kind of adjusting for their numbers as well. Right now, we are seeing somewhere around a 3.5% yield, which is good for real estate because that's become a pretty big thing. Whenever things were, let's see how high they got. We got up to 4.215 on the 10-year Treasury, which would probably mean somewhere around 7.5% interest rate, which is insane with all the high housing right now as well. So yeah, this is definitely welcoming news to the real estate market. Um, somewhere around 3.5% now, which would probably put us back down somewhere around 6% on a 30-year mortgage. So that's welcoming news. So that's good news for real estate. But I do believe, I think some crypto is interesting as well. I have wrote down here. Crypto has gotten obviously hammered as well, as we saw the NASDAQ sector. All those are pretty well connected. I believe that the 10-year Treasury has a huge thing to what's on for like Bitcoin, Ethereum, Cardano is another one. All those cryptos, I believe, are pretty well tied with a 10-year Treasury. Now, I know a lot of people don't think that, but from what I've been seeing, that's pretty well what we're getting. So that's something that we're going to have to keep an eye on. This 10-year Treasury I expect to be continuing to go down as the bond market predicting where interest rates will kind of be here in the next, roughly year, more than likely is kind of what they're predicting would be my guess. And let's go over to what the Federal Reserve is kind of predicting as well. Let's see what they have. We're going to take a look at this dot plot here. And I know the dot plot, this is Federal Reserve. We saw this in, 2020, early 2021, and they were saying that they weren't going to raise interest rates for long periods of time. I believe they were predicting that their first rate hike was going to be in 2024. Well, obviously, here we are in 2023, and we're already at, where are we at now? We're at 4.25 to 4.5% for the federal funds rate, which is insane, and no one could have predicted this, besides a lot of people who are saying that we printed way too much money, which obviously is probably the case. But yeah, let's go over this dot plot for a second. So this is kind of what the Federal Reserve expects interest rates to be at the end of this year. So let's kind of go over. So on your higher end, you're going to be seeing them around 5.5 to 5.75%. And we have a couple on the Federal Reserve that believe that that's kind of going to be the case. And then we have another quarter point down to where they believe that the rates will be somewhere around 4.25 to 5.5. And then obviously most believe that we're going to be just above that 5% to 5.25. So essentially, we're at, like I said, 4.25 to 4.5. So essentially, they're believing that we're going to be about 100 basis points higher by the end of this year. And that's what most are predicting. Now, there are some that are predicting a little bit lower, around 4.75 to 5%. So there are those that are expecting to be around there. So let's move on to 2024 and kind of see where they expect us to be in 2024, which I believe this is going to be quite a bit off, in my opinion. Even I believe it's going to be somewhere around, some of these Federal Reserve officials thinking that it's going to be somewhere in the 3 to quarter to 3.25 and 3.5. So, and I believe that's going to be more accurate. I believe that that's kind of where we're going to be. But those who kind of see something different, definitely comment below. See kind of where you guys think we're going to be here in the next year. Because I truly believe that that's going to be pretty accurate right in there. Probably somewhere around 3% would be my guess. And then obviously we go down to 2025, and they're predicting that we're going to be kind of more closer to neutral, as a lot of them are kind of predicting around that 3% area. But there are some that are still predicting fairly high. One official, my gosh, that's insane. They're really wanting to be restrictive. That must be like James Bullard or something like that. That's pretty crazy. I don't think that there's any way possible that's going to happen. But these are all numbers to keep an eye on as we see kind of what the Federal Reserve believes. Now, something else that we need to keep an eye on, and I think this is going to be a really, really important thing that we're going to have to keep an eye on, is the Dutch Bank, which is just in Germany. The analysts expect that pandemic savings to run out by the end of third quarter. So they're predicting sometime around September, pandemic savings are going to run dry, basically. I do want to add here, JP Morgan are seeing them run out by the end of this year. So basically Christmas time. And then that's kind of whenever they expect the Fed to pivot. Now, I haven't looked to see what their predictions are for 2024, what they expect by the end of 2024 for interest rates to be. My guess is, though, they're going to be around the 3%, as I was saying earlier. But I do believe that that's going to have a huge impact on what the economy is, and we're going to start seeing negative GDP growth and major recession talks by then. And I think that the Federal Reserve is going to have no choice but to cut interest rates by quite a bit. Probably somewhere around 200 basis points would be my prediction. But we will see. And then I believe that that's whenever crypto and all those are going to just fly. So I expect to be able to buy some crypto, some in the NASDAQ, like Apple. Those are kind of my predictions by somewhere around June, July, maybe even August. I think we're going to see a pretty good, 10% reset. And I think there's going to be some really, really good buying opportunities. But for the short term, I do believe those NASDAQ and cryptos as well should do fairly well for the next 3 to 4 months as we continue to see that 10-year treasury go down. But we will just have to find out. Definitely make your predictions down below. This is just kind of what I'm seeing. But this should all really, I believe this is all going to kind of end by 2023, and we're going to start seeing some pretty good data in 2024 to where the Federal Reserve is going to have no choice but to cut interest rates, and we're going to see crypto fly. So that's kind of my prediction right now. Definitely, like I said, comment below. Let me know what you think. This is just what I'm seeing. Tell me if I'm wrong, whatever you think. I want to hear your comments below. Thanks for watching. I'll see you in the next video.